Hello, everyone, and welcome to another edition of Triangle Investor Interviews. I'm your host, Lucian Valkovic, and before I announce my guest, just a reminder of a disclaimer. This interview and all my interviews are not a recommendation to buy, sell shares, any products, or services. Always do your due diligence and consult with your financial advisor. And my guest today is geopolitical and market analyst known for his contrarian views on politics, economics, and financial markets. He publishes the Gold Goats Guns newsletter and blog. I believe there he analyzes the global events through an Austrian economics and anarcho-libertarian lens. I would like to welcome Tom Luongo to my show. Tom, it is really great to have you. Thank you for joining me today.
Thank you, and I'm glad we were finally able to get schedules to mesh and all of that stuff. So I know you and I have been trying to get this done. You've been trying to get me to commit to a date for weeks now, and then I screwed up on earlier in the week. So I'm happy to be here, Lucian, and we'll
No
go from there.
worries, no worries. You are for the first time in my show, just like you said, so a lot of things to cover. Let's start maybe with the Federal Reserve. Federal Reserve projecting only two rate cuts by year end, with holding rates of at 4.25 and 4.5. How can claims of the Fed prioritizing banking elites over economic stability hold up against its stated focus on inflation control? What's your take?
Battle to help Trump and dissent in their way, remake capital markets by destroying what we've all known as the euro-dollar dominated system since the mid 1950s. It's come in a lot of different forms over the years. First, it was Bretton Woods, then it was the London Gold Pool, then it was the Dollar Reserve Standard, and then it was what I would call after 2008 the Coordinated Central Bank Standard, and now we're into the SOFR dominated standard, and SOFR standing for the secured overnight financing rate here in the U.S., and that's changing the definition of what the par value of the dollar worldwide is, and because of that, we're now watching the death throes of the old system where dollars were sent out at with an interest bearing instrument. Cheap, highly depreciated consumer goods were coming back, and we're left with the debt and a whole bunch of junk cars. When you put it like that, it's pretty much the monetary system we had under the old LIBOR standard. We don't have that anymore. And we were never really able to get out from underneath it until we moved to SOFR. And now that we're there, watching it play out, Powell can really, in many ways, act so much more independently of the political regime or milieu in the United States, as well as act independently of the needs of City of London, Hong Kong, and that whole network, that old colonialist European Eurodollar-based network. And that's causing some, public trouble between him and Donald Trump, because Donald Trump is clearly looking at having to roll over some insane amount of debt that Janet Yellen left everybody with, and he would prefer to do that at lower rates. I think Powell, though, understands that, like the Treasury Secretary Scott Bessent, that refinancing is going to happen as a function of an organic desire of building new demand for U.S. dollars or U.S. Treasuries, as opposed to just mutzing with the world with mutzing with rates and the price of risk through the Fed funds rate. Now, that all being said, the Fed did not decline to cut interest rates on Wednesday when everybody else is cutting. Swiss National Bank went to the zero bound yesterday or the day before. ECB cut again. The Riksbank over in Sweden cut again. The Bank of Japan reiterated that they may be done with QT which is effectively loosening monetary policy again for right now. And Trump is a little angry with Powell for not following the rest of the world, but I think Powell is doing exactly what he should do, because what we're seeing as of today, when we're doing this on June 19th, a week after Israel and Iran is blown up and all of this other stuff, is that there's a demand for dollars that's occurring, and you can see it in the T-bill market. So I was looking at this morning, and I always track for my subscribers on a regular basis the internal spreads on the yield curve. So I look at the 1 month, 2 month spread, the 2-3, the 3-6, the 1-2, yada yada yada, all the way out to the 10-30. and it was pretty placid up until about a week ago. There was no reason for Powell to do anything. The 1 month T-bill was trading above Fed funds. It was trading about 4.3%. It was fine. There was no reason for him to do anything. We didn't see any stress in the credit markets. Now the 60-day T-bill is blowing out. Is trading at plus 35 to a 35 basis points to the 1 month, and the 1 month is trading below the bottom of the Fed funds rate. And this has occurred. It started to occur before the Fed declined to cut rates on Wednesday. It's really started last week. And I was thinking about that, and it says to me that there's just a whole lot of dumping in the 2 and 3 bill, the 60-day and 90-day T-bill market in order to get dollars, right? In the 1 month market, the buying is people need repo collateral in the 30-day, in the 14 to 30-day period, and they're using 30-day T-bills as the thing they're trying to get their hands on, because, as we've well known for a long, long time, American banks will not repo European sovereign debt at par to get dollars. So the only way they can get dollars at par is to buy 1 month T-bills. So what it's telling me is that the world at this point in time is staring at the potential for Trump to put a 50% tariff, punitive tariff on the EU unless they come and get a trade deal, and everybody's scrambling to get dollars because they're short of them. And that's what it seems to me. And the confirmatory data point on that is that the Hong Kong dollar is trying to break the peg. Right now, it's been pegged at 7.85 for 8 days now, since just before the Israel-Iran conflict went kinetic. So that's where we are as of literally right now, and as we come into close. There's also, of course, just one last point, Lucian. It's just also the biggest options expiration day in market history as well. And there may be a scramble for dollars, just even domestically or whatever, that there may be a whole bunch of people that are mispositioned in the options market as well. So it's a little bit of everything. But I'm watching gold is down today, silver is down, oil is down, everything is down coming into OPEX, telling me there's a mad scramble for dollars. It may not last, but right now, the dollar is where it looks to be.
Yeah, agreed. Tom, some suggest Trump faces globalist pushback on the tariffs and tax cut plans. What concrete evidence points to Davos and EU elites actively sabotaging his agenda?
Well, back in April, I said that the tariff tantrum was being that where we saw rates blowing out on the long end and on all of that. And the equity market, I said back then, as this looked at me looking at the cross-market analysis, that that was definitely, that to me, that screamed at Davos, for lack of a better term. But I also said that if I'm right about this, and I don't know that I'm right about this, this is my call, we'll know when we see the June Treasury International Capital Report, the TIC report, and we'll see if there's any significant selling by sovereign actors to dump long-term treasuries onto the market, using the yield, lowering prices, and then doing their thing. And lo and behold, the TIC report came out this week, and I looked at it, and Canada sold $57.8 billion worth of U.S. treasuries in April. And Canada, and who's in charge of Canada? Ex-Bank of England and ex-Bank of Canada head Mark Carney, who was installed in Canada to run this operation on the part of Davos. He is the ultimate Davosian insider. He's one of the high priests of their monetary policy. I would put him up there with Mario Draghi and Christine Lagarde as the people that, are in many ways the architects of all of this perfidy and nonsense. The Swiss and the big tell is that the Swiss National Bank went back to the zero bound as well, because the demand for, look, the SNB is in many ways a wholly owned subsidiary of the German Bundesbank. So you've got to, once you start playing those relationships out, at all points lead back to Europe, and it's hard to argue with it. So, and then there's another side of that as well, is that the selling within the Hong Kong dollar space also hit in April as well, because the TIC report also showed that both Hong Kong and Singapore were selling sold a significant amount of their treasury reserves as well to defend their either the currency band in Singapore or the peg in Hong Kong.
Yeah, yeah. Tom, let's discuss Russia-Ukraine conflict.
Sure.
With Russia-Ukraine peace talks collapsing in Istanbul, what specific economic or military leverage does Russia hold to dictate the terms? And how does this counter claims of Western elites driving escalation?
It would be nice if my lighter would work. The Russians have all the military advantage. And they have the military advantage because, well, they've already destroyed 5 Ukrainian armies so far. And now they're reaching the limit at which the Ukrainians can defend themselves. The big one that everybody keeps forgetting, and I keep reminding of, which is that the U.S. Budget for the year runs from June to June. June 30th is the end of all pledged and budgeted support, monetary support for Ukraine from the Biden junta. That's June 30th. And you wonder why everybody's like scrambling for dollars? Because there ain't going to be any dollars coming out of the United States to launder through the existing capital system. So I'm not surprised to see, the 1, 2, 3 month T-bill market explode in the middle of, in the middle of June in anticipation of that. So once that aid ends, I don't know how the Ukrainians are going to continue to pay anybody. I know I've heard too many reports of Ukrainian commanders being scared to pass the actual casualty numbers up the line to Kiev. I think everybody's living in an echo chamber in Brussels, London, Kiev, Berlin, the rest of it. They don't want to hear it. They don't want to know it. And that's usually a sign that if good information is not being passed up the chain to the leadership because they're afraid of what the leadership will say about that information, that's the prime moment when you go from suddenly to all at once. Like Ukraine is, hanging in there, they're hanging in there, and then the whole thing collapses. And the way the Russians are pushing them across the entire front line right now is pretty impressive, especially since they're doing so with a very, very low Russian casualty rate. And I've heard reports of as much as 21-1, or or even around 14-1. And considering that if you're the attacker, you're supposed to be taking out casualties at a rate of 3-1 to the defender. It's easier to defend than it is to attack. Therefore, the Russians are right now, have been, sadly, and I mean this sadly, and I mean this. I know this from the Russian perspective as well. They don't want to be killing Ukrainians, but if you're going to fight, well, this is what's going to happen. That they're winning at about a 40-1 ratio as to what they should be with. So they're far more efficient at grinding out NATO support for the Ukrainian army than NATO can bring assets to the table. And so it's either NATO is going to have to come in directly, or or the Ukrainians are going to get routed and surrender. And I think the Russians are going to push, in the scenario where it all dries up, where support dries up, the Russians are going to do exactly what I said they would do at the beginning of the war. They're going to take everything east of the Dnieper and Odessa. And it may take them another 3 years. It may take them 1 year. It may take them 6 months. I don't know. But they're going to do it. And they've got time on their side. And the way they're waging this war, if you could ever call war cheap, this is the way they're doing it. 155 millimeter shells are cheap. Drones are cheap. They're not expending men. They're not expending a lot of tanks. And if they are spending tanks, they're spending their old tanks. And, that's it. So the coffers are dry. The old NATO equipment has all been used up. Now the question is anybody going to be willing to put their best material on the board? I don't know. We'll see what happens. But and we'll also find out definitively whether or not NATO can fly F-16s against Russian air defense. We still don't know this. We know they can't. We know they can't touch the F-35. At least after the Israelis have had a chance to take the F-35 and turn it into something that doesn't suck, right? And that got proven to everybody last week in Tehran. Like it or not, the F-35 was a piece of junk in the hands of the Israelis, who are very good at taking American technology and making it better. Well, like it or not, it doesn't matter whether you like it. It's just the truth. And that's where we are with the F-35. But the F-35s aren't in combat in Ukraine. Barely get any F-16s into the mix. And there's a reason why Ukraine is not flying F-16s over against the Russians. Maybe it's because the S-400 is better than people think, or a lot. It's detractors think. You have a lot of people on both sides of this fence. Russian technology is so good that we're scared of using it. I think in some instances that's absolutely correct. Against older U.S. technology, that's absolutely correct. Against our latest stuff, no, I don't think it's true. And so you have to just and there's a lot of propaganda on all sides here. And there's and it's both Russian and Iranian and American and Israeli and British and everybody's, it's fifth generation warfare to the tilt right now. And so we really can't to the high heavens right now. So we really have to be willing to stay nimble in our analysis as to what we think is going on. And maybe, just maybe, we should believe that everybody's lying a little bit and everybody's telling the truth a little bit. Yeah. And so. And the proof is in what you're seeing in various theaters. So.
Yeah. You mentioned the Brits. If the Bank of England faces 200 billion in losses from a possible Ukraine debt default, how will this hit UK taxpayers? And does it reinforce arguments about European elites' fiscal recklessness?
It tells you that, and this is, and we're all riffing here. I think on this data point, off of my friend Alex Craner, who first, really started to do the deep dive into this last summer, and Alex's analysis on this and his intuition and his leaps of intuition were excellent, and they're brilliant. And I've always given Alex mad props for this, because I would have missed this if he hadn't come up with it. It is horrific, and the Bank of England is in there repoing all the time. I got a spreadsheet. I've got a Word document of every time the Bank of England has had to go in and their weekly repos, and that number is significant, and they're in there every week. Well, not every week, but they're in there a lot, and they've been in there a lot recently, which tells you that they're trying to keep their banks from going under. Now, I also think that the UK, as a country and as taxpayers, being liquidated, and so the Bank of England doesn't care about Little England. The City of London has never cared about Little England, so they're getting, the British taxpayer, the English taxpayer, is getting strip mined. And this is exactly what I said when Liz Truss was deposed and Queen Elizabeth died in the same week, and they installed City of London Davos guy Rishi Sunak, and then after that it was Keir Starmer. Like, it was always about betraying Brexit, sucking them dry, destroying them, and strip mining them, and leaving them left for dead. And it's quite sad, and to watch it happen. But if they don't get a bailout from the Federal Reserve on this, if they don't get more aid from the Trump administration, then there ain't a money pipeline anymore for it, and they're going to have to deal with it themselves. And that's all bad for the ECB, who doesn't have the ability. All the ECB can do, right, is shuffle deck chairs around on the Titanic. It's like the old Steve Martin joke about Fred's Bank. I don't know if you've. This is I'm dating myself, but this is a whole routine that Steve Martin used to do about. You ever it's security's first trust in Federal Reserve, and all these. They come up with these big beautiful names. It's never Fred's Bank. I'll take your deposit and I'll stick it in my right coat pocket over here, in my left, and yours is in my left coat pocket. And that was his joke, and it was hilarious. But it's kind of what the ECB is in position they're in now. They take bad Italian debt and they stuff it onto the Bundesbanks. Under the Bundesbank, they swap it for German debt and give that debt to the, and they do the same thing with bad Spanish debt and that's all they're doing. They're just swapping bad debt around in order to try and maintain things, while they at the same time take their structural trade deficit with the trade surplus with the United States and launder that back into treasuries in order to continue to pay, in order to build up reserves to be able to do this. And the truth of the matter is that since Powell's raised rates so quickly and so hard, he's left the entire European banking system trillions of dollars underwater, right? Because this is all stuff that they bought at 1%, 0%, 2%, and now they're staring at 10 years that are trading at 5% or 4.5%, 4.5%. So they're down 30-40% all across the whole banking system in Europe is down on that market. And so that whole euro-dollar system is slowly but surely just being drained of all its vitality and its ability to have any effect on what's happening in the American market. Meanwhile, Trump is like inviting the world to come invest into the United States and stick their money in there. He's working with Scott Bessent and Congress to pass the Genius Bill and turn, and tokenize basically the entire treasury market and then move treasuries around the world into previously unbanked portions of the world, so that now you're seeing through Tether, for example, and in the Bitcoin Tether trade, you're seeing U.S. treasuries effectively being held by Nigerians, even though they don't know that they're holding treasuries, but they're holding Tether. And Scott Bessent said this the other day, and exactly what Caitlin Long and I talked about on my podcast a couple of months ago, saying this is what's going to happen. They're going to tokenize and open up the U.S. Treasury market to hundreds of millions of people who could never afford to hold them before in the old central bank reserve system. Now we're moving away from that, and who's arguing that we should have nothing but central bank digital currencies? The very people who no longer have any reserves. They don't have any gold. They have nothing. And they've got no physical collateral to run their economies on, where they can price them anymore at an advantage, meaning Europe, right? So the Saudis are out. All of OPEC Plus is out. The only member of OPEC Plus that Davos has any control over is Mexico. Not really, and they've just tried to install Carney in Canada, and he's gonna have to roll over because he's gonna lose the entire oil production portion of Canada to separatism, because Alberta and Saskatchewan and British Columbia and Manitoba, they're all going to leave. Why should they stay? And so it's fascinating watching this play out in a way that I had only hoped, and now it's happening. And when I first started going down this route and thinking about this stuff 3-4 years ago, maybe even 5 years ago, I never understood. I never thought it would look like this, but clearly somebody else did, and now we're watching it play out. All the bits and pieces are being put in place, and I remind everybody on a daily basis that we live in a world of overlapping psyops. Don't be gaslit by morons. Everybody's talking their book. Everyone's talking their book, and I got news for you: the financial press is controlled by City of London, always has been, and for lack of a better term, Davos, and they're telling you, oh my God, the dollar's going to die. And then they're paying guys to go out there and reiterate their talking points all day long. And you've got free marketeers who hate tariffs because they've been told to hate anything that has anything to do with state control of anything or state intervention into anything. And I'm like, I'm not a fan of tariffs, but I can see how they can be used strategically to, destroy the old system and create a new one, which is what's going on. And even Thomas Sowell, finally had to admit this the other day, a couple months ago. He's like, about a month ago, I watched a video with him. He's like, you know what? It's working. If Trump is using tariffs as a strategic means by which to change the flow of capital around the world to get closer to a sovereign consumer, who am I to argue with it?
I want to hear more about Trump's Doge initiatives actually installing what those initiatives installing. So what specific economic policy could Trump prioritize next to deliver growth without tech elite backing?
Well, there's a lot of things that he has to do. The big one is that he's going to cut tariffs. He's got to cut taxes. He's going to use the tariffs and the threat of tariffs as a means by which to raise revenue. He's got to get spending cut. He's got a Congress that is opposed to this at root and branch, so he's got to get through the next, 15 months. That's why the budget reconciliation bill is so important, because it gets him to the midterms, money-wise. And he doesn't need Congress for anything else for the next 15 months when he gets to the midterms. And then he can roll out the rest of his plan. So you get this thing through and get it passed. He now has Lindsey Graham out of his way on border security, and because Graham was holding up the bill on border security and ICE funding. And then he let it out of committee the other day. So that's going to go, it's going to eventually make it its way out of the Senate there. He has a lot of options. And I talked about some of them. And they are all in some way speculation on my part and people that I have around me that we that I have in my skunk works of people that I talk about this stuff with. But the reality is that they know that they can cut tens, if not hundreds of billions of dollars in waste, fraud, and abuse from the government. Reform the ICs, the intelligence community, which Tulsi Gabbard is doing, and that's why she's under fire right now. Remake and streamline the military spending, and invite investment capital into start rebuilding Main Street and move all of these kids who want to be YouTube influencers because it's easy, and get them out there, as pipe fitters and welders and, making money. I mean, even my daughter, who's like the most, kind of like the poster child for I spend my time playing video games and living in the virtual world, now has her first job in the real world doing stuff. And she came up to me together, and we were talking about it about 2 months ago when she found out that one of her friends or one of the kids that she knows he's like, how much money he's going to make as a welder? I'm like, we've been telling you about trade school forever and a day, because I'm a huge fan of Mike Rowe. I'm like, yeah, hon, like, they make good money and they work hard for 8 hours, and then they go home and they have no stress. They don't have to take their work with them. They don't have to work like I do, where I work freaking 24 hours a day, right? I mean, even when I'm asleep, I'm like, my brain is chewing on this stuff all day long, because that's what I do for a living, right? You don't have to live in your head. You can actually just get out there and, I have a simple job, this task ahead of me, and I'm going to take these two pipes, I'm going to weld them together, and it's job well done. I'm going to move on to the next thing, and you get at the dome at the end of the day. So what did you do? Now, honey, we laid 5 miles worth of pipe. That's what we did today. It's like, it's an accomplishment. You know what you did, and you can look at it and you go, yeah. Or we worked on a road crew and we resurfaced 5 miles worth of road, and it's real. It's real economic activity, building real wealth in the form of infrastructure and durable goods and services that are not going to depreciate tomorrow, and not just making disposable content or whatever. And I mean, I know that that's what I do for a living now, but I didn't for a long time, and but the only reason I've been successful at it is because there was such a dearth and such a need for it. And I've argued many times, I'm like, I would really like the world to get back to a place where you don't need me doing this. You should take all of my knowledge as a chemist and as a metallurgist and all the other things I used to do, and get me back out there in the real world doing real shit. Like, you know what I mean? Like, that's what we should do. But, wasn't in the cards, so this is what I'm doing. So.
Yeah,
but I think that's where we are. I think,
are we
and there's sorry, Lucian, I hate to interrupt you. I didn't fully answer your question. What I mean by that is there are other things that Trump can do within the housing market, and other things within the American government. I don't really want to talk about those things in specific, but between the relisting of Fannie and Freddie and getting them, that's a big chunk of it, and there's a whole set of potential strategies built off of mobilizing the equity within the housing market in the United States, which is something like $32 trillion worth of equity, not liability, equity, over and above. Like, most mortgages in the United States are past their halfway point. They have more than 50 or 60%. They have 60% equity in them or more, and that all can be mobilized in a particular way. And there are many ways to do it. I presented a couple of them in the past. I don't want to go over it here because it'll just derail things. But just understand, we have tons of ways to recapitalize the U.S. because we have an unbelievable amount of assets. And the biggest asset that we have is our financial plumbing, which itself can be monetized in a way and mobilized in a way that people have never considered, or they don't want to consider because they've been told that the United States is going to collapse. So they're not thinking about that. And whose propaganda is that? Got news for you. It's always the same people. City of London, Davos, it's the same thing. They just muddy the waters with a bunch of bullshit, frankly. And I'm so over it. I don't care. Like, no, we're going to break you this time, and we're going to break you hard, and then the world is going to be a better place. It may not be a good place, but it'll be a better place, and that's all I can hope for.
Yeah. Tom, how are you seeing the financial markets going forward? I mean, stock market. Do you really see, let's take a time frame of 6 months. Do you see a correction of some form, or how do you see it?
In the next 6 months, I think the U.S. stock markets, this is a very difficult question. It's a much more difficult question than you think it is. But if I were just looking at things from the perspective of, well, had a big rip last year we had a big rip in the Nikkei in Japan. This year so far we've had a big rip in the DAX and the Eurostoxx 50 and emerging markets. All those rips end. They have, as Martin Armstrong always said, he's like they have an 8-month lifespan, and then the trend has played itself 8 to 9 months, so X number of time periods, and then boom, it has to end, and then we move on. If we're getting back to a world not so dominated by central banks setting the price of risk, and we're moving away from that. I didn't say we're, free of that. Okay, if it's 80% dominated right now by central bank policy, and we move 70% to dominated by central bank policy, and then 60%, and then 50% over the course of time, if that's where if we're moving in that direction, then we're going to see stock markets properly valued. We're going to start to see them more properly reflect risk and value and everything else. So we've already had all these other rips, and we haven't had a rip in the American stock market now for about 6 to 8 months. I think that if you start to see a rip into the dollar, you're going to see a rip into the Dow, and the long end of the U.S. Treasury market, and then it will and then that along with some moderation in inflation, solid, growth overall, and reorganization of the American economy, you'll see the Federal Reserve cut rates more aggressively than they're one saying, and two, the market is handicapping for. I can see Powell cutting 4 times over the course of the last 6 months of this year, starting in July. I think a rate cut in July should be expected, unless, of course, like oil prices stay at $90 a barrel or go to $90 a barrel. Then we're going to have commodity cost push inflation across the board. Powell will not be able to cut rates. But, if this thing with Iran and Israel moderates, if we get some moderation of geopolitical stress, then gold is going to attenuate, the dollar is going to rip, and stock markets are going to rip as well here in the United States. And we're going to get a moderation on the long end of the yield curve in the U.S., which will give Powell the impetus to cut rates, especially, and he'll be able to do so without having, to, hold rates so high that it's stifling things at this point. I understand Trump's stated frustration with Powell. I get it. Trump's thinking about it like a real estate developer, like he always does, where he wants lower cost of capital so that he can go out and do big things. And that's the way Trump's mind works. But there's a bigger game than that. And I think he knows that. So he plays everybody off of each other, and he leaves strategic ambiguity on the table. It's how he operates. So, we know that we're coming to the end of the Powell era. Powell was the right FOMC chairman for this period. The transition from LIBOR to SOFR, but he's not going to be the right guy for a world where tariffs dominate. He's not going to be that guy. I think Powell understands that. I don't think Powell wants to be Federal Reserve Chair for a third term. But he, like Trump, had, Daniel DiMartino Booth used to make the point all the time when we were talking about his reconfirmation back in 2022. In 2021, he said, Powell's independently wealthy. He's got all his friends in private equity. He doesn't need to do another term of this. The same arguments that people make about how Trump was a billionaire and he didn't need to come try and save the country as president. Same thing with Scott Bessent. Why is Scott Bessent at Treasury? Scott Bessent could be just sitting, on a private island somewhere with all of his winnings and just, live the good life. And none of these men are doing that. And so that means that they're doing that for a reason. And that reason, and when you have men of this caliber, you're going to have disagreements. And you're going to have, and they're going to be looking at things from their perspective, and they're going to comment from that perspective. So what I think with that's a long answer, long way of saying, I will be happy if the stock market churns for 6 months. Like the Dow. I think if the stock market, if the Dow churns while, for 3 to 6 months, that'd be okay. Like churn between 42 and 45, the previous high, and just consolidate in that range and build a new base between 42 and 45 while we work all this chaos out. That would be a major win for the Dow, given its valuations. I mean, we have historical valuations on the S&P and the Dow and everything else, right? Why? Because most of the rise in the S&P 500 over the last 10 years or 12 years can be attributed to the Mag 7. We get rotation out of the Mag 7 and into the general economy, then we should just get a nice, consolidation period. Meanwhile, money can flow out of Europe, and money can flow out of the DAX and the French CAC 40 and the Eurostoxx 50, which is already rolling over, by the way. The Eurostoxx 50 is going to underperform the Dow for Q2. It's already here. So we're already seeing it, but we haven't seen it yet. And so the Dow can outperform by just holding serve while everything else corrects another 5 or 10%.
Yeah.
That would be reasonable. But if we are also, but that's also telling you that we're getting ready for a sovereign debt crisis in Europe, if not this year, then next year. And I know I've been saying that for a long time, but look, these people are the center, they're the other center of the universe. So this is the final boss fight, right? And while I could see it all like laying out over time, like everything else, timing is for the gods, and the better you get at this, the more experience you get at this, the more you have to refine your understanding of things. So, watch the euro carefully here. Watch the pound carefully. When I see City of London guys going out there this morning calling for the pound at $1.60, I'm like, really? How? Like, the FX market's getting tokenized. It's all moving onto the Ripple blockchain, unless, City of London owns Ripple, which I don't think is happening. And other tokenized blockchains. I don't see it. I mean, because City of London's, the pound's whole raison d'etre is to settle Forex. It's the only thing it does. It's not used for anything else. And if they lose their Forex market share, then I don't see the pound going to $1.60. And I see the dollar back at 105, the dollar index back at 105. I see a pound at $1.20. I see a euro back at parity, which is where we were at the beginning of the year. And that seems reasonable to me. Honestly, I think the euro breaks and it goes to 60 cents. And I think the pound properly valued should be 80 cents. But, the people talking their book are the ones that want the pound at $1.60 because they're trying to destroy what's left of Little England. They're trying to strip mine the country. And that's coming straight out of the mouths of the people who are hostile to to Main Street England, and Main Street America, and mainstream France, and mainstream Germany, and mainstream Poland. So, salt all that to taste, but that's what I say. Okay.
Yeah, Tom, quick return to Jerome Powell. He warned of 4.4 unemployment by mid-2025. How can assertions that the Fed is deliberately undermining Trump's economic agenda be proven? And what data contradicts the narrative?
Look, we're still near full employment, right? 4.5%. We got, inflation is running a little hot. Okay, fine. But a lot of that is based on, we're still working out the aftershocks of one of the worst inflations ever under Biden. All the COVID stimulus was insane. And Powell's done unbelievable work to drain a lot of that. And you got to give him credit for that. He uses the dual mandate. Now, this is the thing about Jerome Powell. He uses the dual mandate of stable prices and full employment and fighting inflation and the 2% inflation target. He uses that to his advantage. It's his version of kayfabe. Right? It's his version of of setting narratives, and he just talks about it in terms that everybody wants to understand, and then he doesn't care that they lambaste him in the press over it. He didn't give a damn. He doesn't care. He just keeps saying it. He just keeps doing what he's going to do. I mean, he's actually at the point now where he is the guy. Remember, I mean, you're probably old enough to remember Jim Rickards used to say that Mario Draghi was the best central banker in the world because he said little and did less. Well, Powell says a lot now, but it's all jargon and garbage and does very little. As long as he can continue to shrink the Fed's balance sheet in the background, as long as we can get Fannie and Freddie out of conservatorship and stabilize housing prices, because they will literally stabilize housing prices by making it much, much easier for the mortgage market to operate, and if we get rid of the supplemental leverage ratio, allowing U.S. banks to deploy more of their balance sheet, that's what everybody's worried about. All that's staring you in the face. What happens when we can support entry level housing? Yeah, it's inflation that we can support entry level housing at $200,000 for a home. Okay, whatever. We have to accept that the old pricing regime is gone. We're not going back to 2015 prices. We can't. We printed too much money, and if we did, it would be a deflationary collapse that nobody in the world wants. So we're here. We've had it. Now let's stabilize it and move forward, and get over yourself. And yeah, there's going to be that kind of inflationary lift, and this is going to be the new normal. But we don't want it to be any worse than this. And then you can start really working on cutting out the egregiously complicated and obnoxious parts of our tax code, which costs more which creates more potential enforcement and government intervention than it does actually generate revenue. And we have a lot of those taxes. Everybody across the entire West has those taxes. Who does that, and I'm now speaking specifically about things that Trump kind of threw out there. Let's get rid of capital gains tax. It's a dumb tax. It doesn't even bring in that much money. And everybody has to spend all day, every day, trying to figure out how not to deal with capital gains tax. I'll give you a perfect example as to why it's so important, and why the eat the rich Democrats are lying through their, like Elizabeth Warren, are lying through their teeth. The argument against getting rid of the capital gains tax is that it'll only help Trump's billionaire buddies. That's nonsense. Yes, most rich people are the only ones that own stocks, a significant number of stocks. Agreed. Most of Main Street has their stock wealth in their stock portfolios in tax-deferred arrangements like 401ks, SEPs, IRAs, yada, yada, yada. Right? Okay. But what most people don't realize, because most people don't run a small business, is that any smart small business owner has an LLC in the United States. I don't know if you know this, but in our system, in order to avoid the worst parts of our tax code, you have a small business owner. Their business, they have a tire shop. Their business makes $200,000 a year. Now, their LLC makes $200,000. If they don't structure that by giving themselves a salary, if they take that entire profit as salary, they've got to pay self-employment tax up to $160,000. That means they have to pay full FICA, which means 15.3% on Social Security and Medicare. And they pay it on all 160 grand. Or they can pay themselves a very normal salary, like $40,000 or $50,000, and then the other 110 grand or 170 grand flows to their personal income tax statement as capital gains, as dividends, which then get taxed at the capital gains rate. You get rid of the capital gains tax, they're not paying taxes on most of the profits that their businesses are actually generating. Now they can choose how. Now they don't have to minimize their salary. Now they can say, well, I do want a Social Security check of some amount when I'm older, so I can pay myself $70,000 a year, pay self-employment tax on that money, and then not pay taxes on the rest of it. And that would free up and lower the cost of their business by an amazing amount of money, because a small business owner that has a $200,000 a year profit is in the 28% tax bracket or 25% tax bracket. It's a lot of money.
Yeah.
So you can imagine that person, if you just go ahead and do the math with the numbers I just ran at you, and you're talking about going from paying $5,000 to $7,000 a year, or $35,000 to $40,000 a year in taxes, to $5,000 to $7,000. That's money that can be immediately put back into the business to expand the business, to pay people better salaries, to provide better benefits, to provide better service, to keep their shops open past 7 o'clock at night, which is where we are all post friggin' COVID, where everything closes at 7, 8 o'clock. Like, it's retarded. It's pathetic, and it would radically change the way we handle capital on Main Street, not Wall Street. Yes, Wall Street will get a benefit. Who cares? Main Street gets the benefit.
Yeah. Tom, let's wrap it up with this. I really want to thank you for coming to my show, and I really look forward to host you again soon.
Absolutely. Absolutely, and I'm really glad we got a chance to do this, Lucian, and we will absolutely do it again.